The first thing to talk about is this: Trump deliberately crashing the markets to get interest rate down. This is like extremely talked about on Twitter. It says the Trump administration may be intentionally creating uncertainty in the stock market to corner the Federal Reserve Chair Powell into lowering interest rates, which Trump said before his inauguration he wanted the rates lower. Doing so increases the likelihood that the U.S. won't need to refinance $7 trillion of debt when it is due over the next few months. So Pompliano, our Bitcoin guy, explains how basically by him bringing the stock market down, he will trigger the Fed to cut rates. Cutting the rates means we can refinance the debt at a cheaper price. That does make a lot of sense, doesn't it? So it says Trump and Secretary of Treasury Scott Bessent are taking matters into their own hands. They're crashing asset prices in an attempt to force Powell to cut rates. So then here you go. Thomas Kralow says Trump is setting up a stock market crash. The U.S. government needs to refinance $7 trillion in debt over the next 6 months. Trump doesn't want to do it at the current 10-year yields. This is why he's letting the stock market drop while pushing bonds higher. As bond prices rise, yields on the bonds go down, return on the bonds go down, making it cheaper for the government to refinance the debt. Lower yields will also pressure the Fed to cut rates, which is ultimately bullish for risk assets. Short-term pain, long-term gain. Everybody in the chat, do you hate that idea? Like, I don't. I think it makes a lot of sense.